Hi, welcome back to the channel. Now, in this month's analysis, I'm going to walk through another really high-level broader market overview. I'll cover all of the major stock market indexes and their asset classes. I'll cover the recent correction. I'll also have around 20 individual stock ideas for your watch lists going into September. Now, it's taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. And for those of you that are new around here and maybe you've just stumbled onto my work from social media, hopefully the Scottish accent isn't too difficult to understand. You should hopefully have some subtitles. But before I get into the charts, if you picked up last month's analysis, hopefully my charts have helped you pick up some of the recent discounts. If you follow me on Twitter, hopefully my daily posts have helped you as well. I'm told I've got pretty much everything spot on over the last couple of months. But in the analysis this month, I will be covering the market warning signals, the levels to keep an eye on, as well as some of my favourite charts. Hopefully we can get back to an environment where the best players are scoring the most points again. I think probably most of us prefer that. Now, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted disclosures on the charts. If you're new to the channel, I like to use a combination of technicals and fundamentals. I'm a huge advocate of systematic process. I think most of you know by now that I do not use the magical Harry hindsight indicator. A timestamp absolutely everything, which is massively important for the field in which I work. I'm one of the very few who go on the record with their work, but my work is pretty much for everyone. I think if you are an investor, a trader, if you trade options, if you're a financial advisor or a money manager, you'll probably find a lot of value from this analysis. But my work is not geared towards buy and hold forever. Unfortunately, I do believe in risk management. I am looking for structural trends that last weeks to months, and I like to use logical price levels and targets. If we sat down and had a beer, I'd probably tell you I'm more of a technical investor these days, but my work does apply to most styles, and I do have clients at most of the major investment banks now. But please do pause the video. Very important disclaimer. Don't act on anything without your own due diligence. But before we kick into the charts, please smash the like button and subscribe. It really does help with the YouTube algorithm, and it really does help to get my work noticed a little more as well. But I think where I want to start off with this month is just a chart that I put out to social media at the beginning of the month, which turned out to be the exact bottom in the market. But one of the questions that I'm being asked a lot is, because of this volatility spike, can we expect more volatility in the future? Now, hopefully what the chart shows, and I think this maybe comes down to a lot of folks that are perhaps a little bit more inexperienced with the VIX and what the signals are with it. But I think the chart is pretty clear. I think when we get, massive monster spikes in the VIX, history tells us that it's a decent buy signal for the market. And that's exactly what we've had. Obviously, hindsight now tells us that we should have been buying stocks on the 5th of August. For us personally, it was the 6th of August. But certainly, if we do get any more volatility spikes in the near future, you could maybe come back and reference this chart. It is a really good buy signal when we get those VIX spikes. But we are coming into September now. September is notoriously choppy. It's a little bit more difficult. I will get into seasonality in just a quick second. But another chart that I just want to bring into focus is the Fed funds rate. Now, again, some of you will have seen me post this on Twitter earlier on this month. Obviously, we've had Jerome Powell and the Fed communicate various policy decisions in the near-term horizon. I think there's a massive expectation that we are probably about to see a cycle of reduced rates. And what does that often mean for the market? Obviously, when we get the Fed funds start to come down, again, we can see that historically we can have a little bit of chop with the market. So that's something that I've got a very, very close eye on at the moment. Also, I want to bring into focus the yield curve. Now, I've actually been covering this chart for a couple of years because I think, again, a lot of folks think that because the yield curve is inverted that there should be a recession or a crash, but the actual signal is when we uninvert. And this is something that I've been communicating to our clients over the last few weeks, is with the yield curve, we are now very, very close to uninverting. And again, typically this is a signal that can tell us that there is perhaps some chop on the horizon. Now, between the yield curve and the Fed funds, it doesn't mean that the market is about to crash in September or October. This can take some months to play out. But what it does communicate is that if you are looking to launch into a variety of new buy positions in the market with maybe a mid-term to a long-term time horizon, perhaps the better outlook is to maybe just take it month by month. In this type of environment, we already know that with seasonality, September again is notoriously choppy and difficult. A lot of corrections kick in September. Now, the other thing to say is we've already had a correction. We've had the triple Qs, technology fall off a cliff, I think down maybe 11-12%, something like that. But certainly it doesn't mean that we can't have more chop going into September. But seasonality should always be taken with a pinch of salt. We could just as easily have a monster move to the upside. We've seen it already with August. August is typically a poor month for the market, but as we can see at the moment, the S&P 500 is currently up nearly 1.5% on the month. So seasonality isn't a guarantee, but I think when we take into consideration the Fed funds, the yield curve and seasonality, I think September I'm probably a little bit more cautious than I typically am, but that doesn't mean that I'm not looking for opportunities to the long side. With the VIX, as I've already touched on, we had a monster spike, but we are back into the green zone. This is a really basic VIX chart. It just signals where we should be looking to kind of have our thought process when we're in this green zone. I'm looking for stocks to buy, a little bit of caution above 20 and 30. If we're chopping around 30, then absolutely no way I'm looking at stocks. But when we get these monster spikes, again, that's a very good buy signal, as I've already touched on. But what are the major indexes saying at the moment now? I just want to communicate that I am recording this analysis around 3 hours before the end of Friday's session. We're about to head into a long weekend. But it does look like at the moment the NYSE composite is probably going to go out at closing weekly all-time highs. Now, that's not a bearish characteristic of the market. We've obviously had a monster rebound over the last month. I think most of us are pretty happy with it, those that obviously buying dips, etc. We've got the Russell 3000 again, pulled back to its 40-week moving average. Again, this is one of those charts that I posted to Twitter in real time, middle of the month, just highlighting that again. I think it's an environment where you should really be looking to buy stocks. So we are testing all-time highs again in the Russell 3000. Again, hopefully these charts can break out and continue higher. But whilst we are chopping around these historical all-time high levels, again, a little bit of chop, a little bit of digestion is perfectly normal. It doesn't mean all stocks chop. Plenty of stocks are moving higher and doing very, very well. But hopefully by the end of the close here, we can get a pretty decent confirmed weekly closing all-time high for the S&P 500. It just put in a tradable low, like I said, at the start of the month, and it's just been moving higher ever since. So The Dow, as you would expect, is mirroring the S&P 500. So again, hopefully we can go out at new closing weekly all-time highs. I've already touched on the Russell 3000. The triple Qs, again, it's probably one of those. I think we obviously had Nvidia earnings during the week, but I think there is potentially a catch-up to be had with the triple Qs. I think there's an expectation that if the NYSE composite is going out at new all-time highs, we have the Dow and the S&P 500, stands to reason that maybe the triple Qs are going to play catch-up, but we'll need to see how things develop, I think, with a lot of the mega cap tech names. Obviously, Nvidia is the one that's front and centre at the moment. I will be covering that chart in just a couple of minutes. But yeah, I think there's a potential catch-up there for the triple Qs. The Russell 2000, again, I think there's a potential catch-up there as well over the next few weeks. Going back, obviously, to the Fed funds chart, obviously, there's an expectation that running into that, hopefully there's some kind of bullish moves higher, and then perhaps on the other side of the Fed interest rate decisions, there's probably a little bit more volatility than normal. But I think for the moment, I think for hopefully the first half of September, potentially there's a catch up to be had with the Russell 2000 and the micro caps. Now, obviously the bond market, rates, etc. A lot of you professionals are really interested in it. I think most of retail not so much. But for those of you that maybe not aware, I went on the record last October just highlighting that I thought that rates were potentially topping, and in that environment you might want to consider buying TLT. The TLT, this is an important level dating back to 2000. Lo and behold, obviously massive move higher. It's been basing ever since. I think TLT is potentially setting up for maybe a base. We've already met our first target with TLT, but potentially if it breaks out, I think above 100, I think that brings in target to around 109. Obviously gold is front and centre, I think, for a lot of folks as well. Again, there's no real change to this chart for me. This is a chart that I've been working with for the last few months. Since we broke out above that 2100 level, I've been working with an upside target there of around 3200. Obviously, with it being gold, it's not going to get there, like a momentum stock. But yeah, I think if you're looking for slow and steady wins the race, especially with the current macro environment, perhaps gold might be one of those areas that does stand to benefit over the medium term. Now, like I said at the start, I do have around 20 individual stock ideas for your watch lists that I'm about to walk through. But like I said at the start, put a lot of hard work into creating and building this analysis. So please do smash the like button. Like I said, it really does help with the YouTube algorithm, especially in the stock market niche. I don't enable any ads on the videos or anything like that, so please do hit the like button. But where I want to start, I think, with the individual stocks is, I think Palantir is an obvious one. I've been covering this chart for months, and yeah, for me, Palantir is breaking out of a 3-year cup and handle pattern. Obviously, we had earnings on this one a month ago. Massive monster reaction to earnings, and it has broken out, and we're looking for it to go and test those previous all-time highs. Now, obviously, the caveat to that is the broader market holding up and really not shitting the bed. But I think at the moment, I think Palantir, I'm super happy with what it's doing, and let's see how it develops. It's outperforming the market by 54% so far year to date. It's having a monster year, and I think those of us that own Palantir probably see the longer term prospects in it, and long may it continue. Another chart I want to bring into focus is Block. Now, for me, I think my work's probably starting to get really well known for buy low, sell high. I'm not one of those kind of relative strength breakout gurus or anything like that. I'm looking for solid stocks, solid companies that have been beaten down a little bit, and I'm looking for potential entries before the relative strength gurus start to pump it. So I'm looking for relative strength at its source, and I think with something like Block, I think I'm viewing this as a potential inverse an inverse head and shoulders pattern, and I think you can define risk levels below the recent lows with upside targets there up around 92. Now, the reason I like buy low, sell high is you're getting in at the start, and if it does break out and get above that 92 level, that's when you get all the momentum traders piling into it, and you can usually look to sell into that strength. So I'm looking at Block. I'm also Nvidia. Now, Nvidia has been one of our high conviction ideas off the lows. We put out an alert on this one on the 6th of August, just as a buy on that VIX spike. Now, it worked out really, really well. Sold prior to earnings. Now, it has pulled back to a support level here. So I'm looking at the kind of levels in the market and ideally trying to pinpoint where institutions are looking to buy stocks. Obviously, they've just announced a massive stock buyback. I think it was 50 billion maybe, stock buyback during the week. So I'm looking to see if this level here around 118 holds just going into the weekend. It's looking quite weak on the back of earnings, and honestly, if Nvidia drops another 10% from here, I'll be the first one to be gobbling it up. But as it stands at the moment, I'm just waiting to see where the chips lie post earnings, but very much on the watch list going into September. Microsoft, again, another buy low, sell high opportunity. A little bit of a pullback over the last week. Ultimately, working with upside targets, one around 430, and I think if you are looking for a newer position, perhaps a breakout above 430 in September might make sense. Tesla's another one, very, very similar looking chart to Square Inc. Again, lots of clients that are always looking to get entries into these mega cap stocks. Obviously, $650 billion market cap, and it's obviously not going anywhere. But again, I think upside targets there around 270. If you've got a couple of few months time horizon, it might make some sense. Google has pulled back to its 200-day simple moving average, which historically has been a decent buy point for this particular stock. I think it's been quite disappointing over the last few weeks because I would probably have expected it to maybe rebound with a little bit more conviction, maybe like Apple has or Microsoft has, but for some reason Alphabet has just been very, very lukewarm. But for us, our trailing stop is now beyond the recommended entry price, and ultimately we'll need to see how things develop. But I think that is one of those mega cap tech names that, if you're not looking at stocks that have been beaten down 20%, then what are we even doing? So I think Alphabet might be one of those that has a little bit of a catch up. Netflix, again, very, very close to breaking out to new all-time highs. It has been threatening over the last couple of weeks, but it hasn't really put in that confirmed breakout. So I think above $700, I think there could be a potential trade to be had there. I think Amazon has been another one of those buy low, sell high opportunities. Again, I get asked about Amazon a lot, just I think purely because of the size of the company, and everybody's looking for entries into beating up stocks. Again, if you are out there and you've learned the trick about buying stocks when they move above lines. Also, when you get these big mega cap names like Amazon, Apple, etc., it's certainly worthwhile just building in the basic support and resistance levels. I'm not big on trend lines. I think horizontal levels are much more relevant, and what you can often find with these levels. I'm not expecting everybody to be able to utilize Fibonacci on their charts. A lot of you won't have the technical analysis tools to build this out, etc., and I get it. But these are what I would deem to be institutional levels, where I think there's a high probability of institutions stepping in. If we know that institutions are stepping in at these levels, why can't we just trade with them? That's ultimately what I'm looking to do with stocks like Amazon, etc. It's been rebounding beautifully. Upside targets there around 190. Above 190 brings in around 220. eBay has been very, very slow and steady, wins the race over the last couple of months. This is actually a 3-month consolidation. This is a weekly chart, but it has broken out with a little bit of conviction over the last few weeks. So this is one of the charts that we've been working with our clients, and certainly upside targets around 80, but that's a multi-month upside target to aim for. Again, the caveat is that the market holds up as well. GoDaddy, I actually covered this chart last month. Somebody reached out asking me to provide an update on it. It's working out very, very well. I think very, very reasonable 12 months earnings growth. I think there's a reasonable PE ratio around 13x. Obviously, it's a $23 billion market cap. It's not a small company anymore. And it's been trending beautifully. Long may it continue. Our trailing stop now is up at 157. One of the charts that I've been looking at very closely on a personal note this week is the CCJ, obviously aligned with uranium, which has been beaten to death over the last few months. But I am, again, like I said, starting to look at opportunities from a buy low, sell high perspective in a lot of these areas, aligned perhaps more with the kind of commodity side of things. But I think if this level here for CCJ holds up and perhaps next week we can get some kind of rebound here, then maybe CCJ will fit the bill. Very, very easy out if the move doesn't work out. We've got Motorola, which has just been absolutely ridiculous over the last few months. I think it's only had one down week in the last 3-4 months, and it just keeps going. So we're working with target 2 up around 570. I think it stands to reason this sort of performance and run won't last forever, but it has been incredibly stress-free. So I think if there is a pullback in Motorola, I think provided that $400 level holds up, then perhaps that might offer opportunity for those of you that have missed it. Same with Apple. We are working with upside targets here around 235. I think just to kind of go back to what I was saying about the relative strength gurus and finding relative strength at its source, again, I'm always looking at these stocks, companies, when they do get beaten up a little bit, some kind of signal and relative strength has been rising off the lows. So Apple is actually currently outperforming the market on this recent trend, although it is only outperforming 1% year to date against the S&P 500. It is significantly outperforming off the lows. So congratulations anybody that follows me on Twitter and bought this chart a few months ago. Goldman Sachs, again, working out pretty well. I think what can we say about the investment banks at this point? I think if we do get an environment where we do get the rates starting to drop, again, provided the market doesn't fall off a cliff, obviously banks start to become more appealing. But I think probably what we're starting to see with the regional banks and the JP Morgans of the world, etc., is the market's actually starting to price in. I think so. Maybe one of those areas where we get a kind of sell the news on the interest rate drops, but again, we'll see how things play out. Obviously, Rocket has been a massive gainer over the last 6 weeks. This is one of our high conviction ideas, but it does look like the trend is now starting to come under pressure a little bit. It has dropped below that $20 round number level, but it is above a rising 5-week moving average. It has broken out of a 3-year base. It is a play on a drop in rates. but I would like to see this dip start to get bought up very, very soon. Again, SoFi, another one of our buy low, sell high charts, is potentially threatening to break out, and I think this is probably a good example of why I'm not massively keen on recommending breakouts on overextended names. I think this rally here, 30% rally over the course of a few weeks, and what's happening today, it looks like there was a breakout yesterday, but today we are starting to stall a little bit. But SoFi, I think longer term prospects, great. I really like the short interest on it, 17% short interest. So if this does get some legs in September, the thing about short interest and breakouts, get a lot of short covering coming in real quick. So might be one to keep an eye on. We've got AMD, one of our buy low charts. Again, we're working with upside targets there around 183. But our trailing stop is now beyond our recommended entry position, so it's essentially a risk-free trade at this point. AbbVie, again, chart I actually covered last month on this this breakout to new all-time highs with upside targets around 228. Again, the thesis I have here hasn't really changed. If you go and have a look at the biotech charts, XBI, IBB, both are looking pretty constructive. So potentially AbbVie might be one of those names to look at in September. We've got Royal Caribbean, again, big pullback over the last month, but the dip has been bought up. This is again one of our trade ideas from our chart book. Buy low, sell high is kicked in, and ultimately we are hoping to see this start to move higher from current levels. We've got a target there around 217, and we also have ON Holdings, again another buy low, sell high chart. It's been basing over the last few months, and ultimately we've got previous all-time highs, I think, back around, was that $55? So it'll be interesting to see what happens there. But if you have stuck around to the end, please do smash the like button. If you're new and you're wondering who I am and what it is I do, please do go and jump on to our website at honeystocks.com. All of our transparent, time-stamped work is all laid out. I only use my own charts and data, but we do provide memberships to all of our premium work, which includes our premium weekend analysis, which goes out to our clients and members every weekend with all of our best charts and our weekend hot list. We also provide access to all of our highest conviction investment ideas. I'll show you what that looks like in just a second. And I also provide access to our midweek halftime analysis, which is a really short video every Wednesday, which just provides an update on the market with a few trade ideas as well. We also provide access to wonderful community of professionals, investors and traders from across the world, highly intelligent group, access to our chart books which cover the most liquid stocks, ETFs and commodities from all across the world. And if you're new to technical analysis, I also provide access to a complete technical analysis program, which I'm told is incredibly well built and easy to digest. But just to quickly show you what our high conviction investment ideas look like, this is a recent idea I think I touched on NVIDIA, one of our trade ideas. Obviously worked out incredibly well. I think Rocket, another idea recently that's worked incredibly well. TKO, big gainer. Spotify was massive earlier this year. Another big one there for Charter Communications. But I am very, very unique in what I do. I lay out for complete transparency all of our high conviction ideas, how those stocks have gone on to perform from when they've been recommended. I've done this every single year for the last 7 years. So feel free to go and check the types of stocks that I like to recommend, or the types of stocks that you like to buy, not someone who's recommending penny stocks or pump and dumps or anything like that. So again, like I said, feel free to go and check all of that out. But I think my work is probably a good fit for you if you're someone who has a mid-term approach and you're maybe weeks to months out. I think if you are looking to build a systematic process, if you're too busy with work, life, family, business, and you just want to be part of an intelligent and successful community, maybe my work might be a good fit, or maybe you're just sick of hunting around social media for ideas and you would like to have access to a professional analyst every day, because I do support with chart requests as well. I've got a very dedicated platform. I'm not on Discord or anything like that. Got a very professional setup. So if you are somebody who would like a request or a custom chart built, there's an instant messaging service attached to my community as well, and you can message me directly any time of day. So hopefully you found some value from my work, and like I said, don't leave without smashing the like button. But if you've stuck here to the end, thank you very much for watching, and have a wonderful weekend.